Hello traders, and welcome to this free edition of the market weekly outlook before the Easter holidays, where we do expect thin liquidity until Tuesday. But let's take a look what is happening on the market at the moment. If you saw my analysis of the DXY previously, the waves that we counted, we indicated that this zone would be a strike zone for the downside reversal or a bounce zone for one more swing to the upside. So far we have a strong bounce from this support, and the break above this wedge would lead to, which is at 102.4, would lead to a continuation in swing higher to the point X, to the, let's say, this 4 wave at 106.3. Furthermore, we have a channel so this is a downside channel, and we are touching the middle of it almost. So a break above this wedge above 102.5 will lead to a test of 104, and if we get a break there, then we could have a ride which is predicted by our analysis and counts to 106 for the DXY. So far we look at the USD and the dollar index, DXY, for the long trades and for the buy against the other currencies, which we'll take a look. Also we will take a look at the Forex market, at the indices and the crypto market in this weekly free market overview. So let us switch to Euro USD. I will show you the weekly chart just so you can see the big picture of the Euro USD. So actually for the Euro USD, this is that strike zone here, where we have the wicks, the strong wicks to the upside rejection for the first time, and then this week again we have a rejection. So this could be like with the DXY, it is a kind of a consolidation triangle before, let's say, an upside swing higher. Okay, so this is it, triangle, the consolidation triangle for the upside swing higher, like with the DXY, continuation lower, and this would be a continuation higher, but only upon a break above 1.103. We are looking at the moment, as we said with the DXY, to swing lower into this triangle to 1.05, and then again a test of this strong resistance zone. Also you can identify here the channel, okay, an uptrend channel which is holding so far good, and we have a good continuation possibility. The only thing is, will this triangle consolidation prevail, or will we have a test of 106 and then bounce to the upside? Okay, I will use this chance as a pause between the two currency pairs to invite you to register here on this website for one-on-one mentoring or traders classroom. At the moment we have a one-on-one mentoring discounted for the Easter holidays, so a good discount on an intro price you can use. You can see that on our homepage, and you will learn complete techniques of identifying strong support resistance levels, combining Elliott Wave analysis with the price action. All of that is packed with the Funded Trader 50K live account, where you will have a profit share as well, and you can apply all that you have learned in this mentoring there. Okay, so let us continue. I will show you a couple of Forex pairs. USD CAD, also interesting pair for trading at this point. It's connected, of course, with the oil price action, and at the moment we have an upside bounce from this support in this let's say wedge upside continuation. We have a sideways triangle. I will mark this as a third wave to the upside, and a possible break above 1.38. Of course, it do have to be confirmed in the future, of course. Let's look at the counts. If we mark this as the second count, is the second wave, and this is the third wave, this is a fourth wave, and this would be the fifth wave to the upside. So a strong move higher and above this long-term falling trend line will be a trigger for the USD CAD extreme upside continuation. Okay, targeting maybe even 1.46. It also as well depends on oil. Okay, one more pair that is interesting for you and for most of the traders is, of course, USD Japanese yen, which recently had a strong move higher, and the breach of this long-term upside resistance, which is 126. That resistance will be on a test soon, 125, for the continuation higher in the USD Japanese yen. With the USD Japanese yen, if we look at the bigger picture, we also have a channel to the upside, not so steep, but a channel that is formed from almost 2011. Okay, so here it is. We had a possible breakout, which was only for a short time to the upside, and now the USD Japanese yen is back into this channel as it is touching the middle of this midpoint of the channel. Also, it all depends on the dollar and the stock market. We prefer here a move to the downside to test 126 and to possibly break below this level to the downside. But also we do not exclude a continuation from here to the upside, and from a little lower, of course, a test of 126 and then a continuation higher again in the channel. So this is the strongest point of the second quarter will be. Okay, so pay attention to that. You have also short-term trend line here as well. Okay, so this is the short-term uptrend line, and the breach below would lead definitely to 126. Let's take a look once more at the Aussie dollar. One more forex pair, Aussie dollar. Also, it is on this striking key point, which is 0.669, 0.67, and the break below this point and this uptrend line here, so below 0.663 would lead to another consolidation and continuation down to 0.6. Okay, and the bounce from here and the confirmed break above 0.673 will lead higher to test again 0.72, which is not excluded. Also, pay attention to these levels, and if I switch to daily for a minute, you will see all this trouble here. So this is the area of non-trading. This is like a bearish flag, but we also have this uptrend line, the support that is holding for a while, and this is the level I was talking about, 0.663, 0.664, where we should expect a bounce or a break below. Okay, let's switch to indices and see what is happening there. I will first open SPX, US 500 index. So this is a consolidation triangle. Okay, and this consolidation triangle has 2 points which are important. It is 4,100, 4,200, or a zone between 4,100 and 4,200, and this one lower, which is now at the moment 0.39. So a break above 4,150 and 4,200 is important, and will push us higher again to almost 4,350 and even higher in that case. Swing down here, which we do expect, to 3,900, and the possible break below will lead to a downside consolidation. So we prefer a little more swing up and down here before a final breakthrough and breakout into direction for the SPX. So swing trading and range trading here is advised. With the Nasdaq is a similar situation. The only thing that the triangle here is not so visible, but we have wedge, which is also a consolidation formation, and this wedge is also properly formed and properly set for a breakout, either higher or lower. And if we get a break above 13,200, we will have an extension higher, and a break below 12,300 will lead to downside continuation. So look at this in the big picture and see what do I mean. This is a rising wedge. It's usually a bearish formation, and if the Nasdaq breaks above 13,200, which I think at this point is not extremely possible, or pin this level, it will be 13,700, and from there also it could go to the downside. So it's not a simple and pure reversal to all the US indices at this point, at this moment. Okay, it's not so simple, and it will be complex. If we look at the European indices, especially the leading DAX, it has, and it almost reached a historical high, which was broken to the downside because of the war in Ukraine, which happens to be on the European soil, and all the complications arising from that. And it also has a gigantic wedge, which is also a rising wedge, and complicated formation. Okay, complicated formation. For a breakout to the upside above 15,800 can lead us higher, and possibly above this historical high that was reached in 2022. But we prefer a swing down here to 15,000 or 14,800, which will be a real and simple test for the downside extension. Okay, so break below. Looking at the commodities, I will just show the gold. This is a extremely long-term range. It's complex. It's not simple for trading. It's far away from a simple thing. This is a rectangle which was breached to the downside in one case. The other way to look at this is with this falling trend line at the moment. I will show you also that. So either way, we have gold approaching a strong resistance. And what does that mean? It means that trading here to the long side and to an upside continuation will not be easy, and we need a lot of confirmations and a break above 2050 for the upside continuation. Also, this is a lower boundary of this wedge inside the rectangle, and it is around now 1912. So a break below this level, 1900, will lead again to the lower end of the range. A special moment on the market. I need to confess that, because also indices are at the key point, commodities are at the key point, Forex pairs, currencies are at the key point. So all is at the key point. It will not be easy. If we look at the Bitcoin, it also is reaching the strong upside resistance, and this strong upside resistance is here at the 28,000. Okay, so a break above 28,000 is required for the upside continuation, and this is Bitcoin style consolidation flag. I will call this like that, and so a break above 28,000 is required for the upside continuation. But rejection here will lead again to consolidation, which we see as a higher probability, to 24,000 and even lower, to test the lower end of this flag. I will call it a flag because it could drive the Bitcoin down to 10,000 and even 8,000 500 if we get a reversal on the dollar and reversal on the stock market, which is at the moment Bitcoin highly correlated with. Okay, so this is it for this free market overview. I again will invite you to register for this services we have here, Traders Classroom, which is on a monthly subscription, and one-to-one mentoring, one-on-one mentoring, which is flexible. You can agree with me what subject should we go deeper, what we will not go deeper. We will have a lot of trading examples, because as you can see, we are trading also. We have extremely good results in the last 2 years, verified by a third party, over 400% return, which is maybe unimaginable for someone, but you can see that all verified by a third party. You can see all the analysis, all the results, and we continue trading. So there is a this mentoring is practical, and also you will learn properly how to apply this analysis on the charts. Okay, thank you for watching this. Have a nice day, nice trading week, and happy Easter.